Hello, it's Richard Wilson from the Family Offices Group. I'm coming to you from Switzerland today. I'm actually in between Zurich and Liechtenstein, where I'm going for a family office and capital raising conference. I'll be speaking there in the conference on what family offices are investing in, so I thought it was appropriate to record a video for you about what family offices invest in and what their kind of priorities for investing are. This is not going to be a really detailed 60-minute or 6-hour video as it would need to be to understand everything about investment priorities of family offices, but it is a 10,000-foot view, and here at 10,000 feet altitude in the Alps, I thought it'd be a great topic to cover. So there's really 4 things that family offices look for while prioritizing investments. This is a generalization, but I think it's important to know to understand how family offices are investing. First thing they look for, above all, 95% of family offices want to look for capital preservation above everything else. In other words, they want to protect the assets, protect the portfolio above everything else. If they had a choice of saving money on taxes or growing their portfolio but taking a risk of losing capital, most of the time they're going to make sure the capital is secured to a reasonable degree before everything else. So that's important to know. If you forget everything else, just remember that that's what family offices prioritize first. The next thing that family offices look for is growth. Long term, they want growth through private equity, through hedge funds, to a lesser degree, through tracking market growth, through things like ETFs and stocks, and maybe some hard assets. And growth is important to family offices. It's not the number 1 thing. It's usually number 2, but it's important. The number 3 thing is taxes, tax efficiency. Oftentimes in the family office industry, they say you don't want the tail wagging the dog. What that means is some people think that tax efficiency is more important than anything when it comes to family offices because the ultra wealthy have so much money they don't want to pay too much taxes. But many family office executives have been telling me, and my experience has shown, that if you put taxes in front of everything else, you'll have poor returns and you could lose some of your capital. So who cares about tax efficiency if you just lost 20% of your portfolio, right? So that's interesting. It comes in usually number 3 when speaking of family offices. And the 4th thing is really income or yield. And many family offices don't care about yield or income as much as tax efficiency, growth, or capital preservation, because they have enough money that just a very small percentage of their money held in cash and cash equivalents will serve their income needs or requirements. Sure, if somebody has 20 million in assets, they're going to have more of a need for income or high yield, especially if they're nearing or in retirement. If somebody has 2 billion in assets, it's going to lower their inherent need for income or yield unless there's capital calls for a lot of private equity investments or some other special situation like a business that might require a lot of consistent income to supply for the business or a new startup business. So there's exceptions to these priorities, but generally it goes capital preservation, growth, tax efficiency, and then yield and income as a 4th priority for family offices. For single family offices, this can drastically change if the single family office pretty much only invests in the industry where they made their money. That makes all of these things change. And with multifamily offices, the larger they get, the more institutional their investments are. But I do find that they follow these priorities even when they get to $3 billion, $5 billion, or much more in assets. So this is Richard Wilson, coming from Switzerland and the Family Offices Group. Thanks for joining me, and I'll talk to you again soon.